Good morning and welcome to the Killik and Co market update. It's been another volatile week for markets, although we haven't seen quite as much movement as we saw last week. Here's the S&P 500 over this year to date. You can see that big rise that happened last week when that 90-day tariff pause was announced, and there have been a few more ups and downs since then. On the plus side, smartphones and computers were exempt from tariffs last weekend, which resulted in a positive start to the week for markets. And there was also a suggestion that there might be some help for the auto sector. However, later in the week it was announced that there would be new export controls on US semiconductor companies selling into China, which led to a sell-off in US markets. The market volatility over the last few weeks has resulted in much higher trading volumes than usual across markets. Apple is a good example here. It's one of the companies that stands to be severely impacted by tariffs given its production in China. Here's the share price chart. The shares have lost about 22% of their value since December. And here's a chart showing the daily volume of Apple shares being traded on the market. This is a one-year chart. The average over the last year is about 60 million shares per day. You can see when the spikes occur, usually when a company is publishing results, but the latest spike, outlined by the pink box, is much wider than usual, showing that the higher trading volumes have been taking place for a relatively long period of time, sometimes as high as 180 million shares per day. During the recent period of market weakness, we have seen more demand for assets that are viewed as safe havens, for example, gold and short-dated UK government bonds. However, one area of the bond market that has suffered is high-yield bonds, otherwise known as junk bonds. These are at the riskier end of the bond spectrum, and unsurprisingly, there is less appetite for them when investors are feeling a bit nervous. Here's a chart showing a US high-yield bond fund. You can see the pattern is quite similar to the one for the equity market, with a significant sell-off since February. This lack of appetite for higher-risk bonds means that companies are struggling to issue new high-yield bonds to the markets. Sometimes private equity companies might issue these bonds in order to fund a takeover. For example, private equity company HIG is trying to issue bonds to fund a takeover of Converge Technology Systems, and ABC Technologies, which is funded by Apollo, is trying to issue bonds to fund a takeover of TI Fluid Systems. Both of these deals have been put on hold because there was no appetite for the high-yield bonds in the market. We're moving into quarterly reporting season, so we're starting to get lots of company results coming out. One clear theme that has emerged so far is that the big Wall Street banks have been benefiting from the higher trading volumes because they're putting so many more orders through, but they have been negatively impacted by the lack of investment banking activity. Goldman Sachs is one example. This chart shows the quarterly revenues that Goldman Sachs has made from a couple of different departments. Trading in equities in the green and investment banking in the pink, with the latter involving helping with IPOs, takeovers and new bond issuance. The first quarter 2025 figures are in the top section, and the equivalent figures for a year ago, the first quarter of 2024, are in the bottom section. Since last year, there has been a 27% increase in revenue from equities and an 8% fall in revenue from investment banking. Overall revenue was up, and it was ahead of expectations. Despite this, shares in Goldman Sachs are significantly lower than they were back in February. Here's the 5-year chart. This may be an indicator that some people are concerned about the possibility of a US recession or a slowdown in growth, and therefore they're reluctant to hold shares in a US bank. This is a stock that we cover, so please do give us a call if you'd like to talk about it in a bit more detail. Moving on to have a look at next week's calendar, it's looking very busy with lots of companies expected to report. It's a big week for the healthcare sector with results due out from Danaher, Intuitive Surgical and Thermo Fisher. That's it from us. Have a great Easter weekend and we look forward to seeing you next Friday.